Very good evening. You're with Business Prime Time on a Wednesday evening, and straight then to our top story. Finance Minister P. Chidambaram today held pre-budget consultations with industry leaders ahead of the big event next month. The headline from there really was that industry has been strongly advising the FM against levying any additional taxes that are supposedly being mulled, including an inheritance tax. Sapna Das joins in with more details. Sapna, take us through some of those key recommendations being made by industry bodies like CII and FICCI.
Well, definitely, this is an important forum of discussion between the industry captains and the finance minister before he unveils the budget on the 28th of February. The major proposals, or rather demands and concerns raised by the industry, can be broken down into indirect taxes and direct taxes. First off, with the direct taxes, there is complete resistance on the part of the industry to kind of be in favor of any kind of a tax for the super rich or any kind of an inheritance tax. The proposal for the separate tax rate for the super rich has come from Dr. Rangarajan, Chairman of the Prime Minister's Economic Advisory Council, and here he has said that there could be a separate higher tax rate for the higher income group here, but the industry is completely opposed to that idea, to that proposal. Similarly, in terms of the inheritance tax rate, kind of levying an inheritance tax, here again they've shot it down. Interestingly enough, it was the finance minister a couple of weeks back in a career event, he had suggested that there could be a debate on the fact whether India actually needs an inheritance tax or not, but clearly the industry is not supporting that. Third, in terms of the commodities, the transaction tax, there was a CTT which the finance minister had proposed way back in the year 2007, and that was not implemented. There is some talk in some quarters that the government may actually come back with the CTT, but the industry is completely opposed to that. They do not want this kind of tax on commodity derivatives or commodities trading. In terms of the indirect tax proposals, they are again very much familiar, in the sense that industry says that due to the lower growth rate, actually it could be the right time for a fiscal stimulus, but looking at the government's fiscal constraints and the fact that the finance minister is completely committed to keeping the fiscal deficit at 5.3%, he has reiterated that today in the state finance minister's meeting also in the morning. So industry is saying that, well, at least make sure that you do not go ahead and increase the excise and service tax rates. They had already been increased by 2% in the last budget. In terms of the peak custom duty rate, here again the industry is demanding that there should not be a reduction in that, in the sense that all the other competing trade partners of India, like the ASEAN countries, they have brought down their peak customs duty to much lower levels. India is still at 10%, but here the industry is sticking to its demand, saying that this is not the right time to reduce the peak customs duty rate, simply because there is a chance of cheap imports flooding into the Indian markets.
The primary concern of the government, despite its recent successes, was to kickstart investment consumption in India, to kickstart investment, and to ensure that there is sustained flow of investment from overseas. So his specific request to industry was to provide ideas by which investment could be revived, both foreign and domestic investment. And happily, I think most of the members, I'm leaving a little early, most of the members have given very good ideas and have outlined what are the obstacles to investment.
There should be no new additional taxes considered in view of the turn in sentiment, which is now cautiously optimistic, but we want to make sure that the investment cycle returns in the country. It's very important that the happy sentiment that has taken our stock markets up continues. So anything which could reverse the sentiment of the market, brings the market down, makes it that much less attractive for the disinvestments that are envisaged. And the government has a huge disinvestment calendar. So we want the best price we can get for the country in these disinvestments.
We welcome the changes announced on GAR. We have requested the Finance Ministry to implement the Kelkar recommendations at the earliest. We have also made suggestions that what is important is growth orientation should be the main focus of the budget.
Okay, India Inc., they're collectively batting against any increases in taxes. Meanwhile, Finance Minister P. Chidambaram